Welcome to the Market Review, where we look at developments in the financial and capital markets as it relates to the economy. Today is Friday, September 18, 2020. I know you're gearing up for the weekend, but let's get on to some interesting developments as it affects our market. And from the stable of Proshare, Nigeria's leading financial information hub, comes another report again. And this time the report is looking at the topic, NSE 10 years. That's a decade of Nigeria Stock Exchange. After a takeover, the good, the bad, and the undecided. A very captivating title for this report. I would like to just get some insight into what this report is about and some learning points from it as it affects our capital market. And with me to lead this conversation is no other person but the managing editor of Proshare Nigeria, Mr. Teslim Shitta-Bey. Nice to have you, Mr. Teslim, after a while.
It's a pleasure being on your program also. It's
yes.
a great pleasure.
Yes, and happy Friday to you.
Yeah, thank you.
So first, I'd like to begin with the fact that this report is highly informative from what we've seen so far. It's quite revealing and also takes a cursory look at a decade of the market in terms of leadership, development, and innovations. But first, what informed this report at this time? You know, Proshare has been publishing several reports amidst the pandemic. That's commendable. But what informed this particular one?
Oh, that's a very interesting question, actually. About 2 months ago, Proshare released a report on the market.
Yeah.
It's a trading portal report.
Yes.
And in the process of releasing this report, those who read the report noticed that we didn't really mention the fact that this was a decade after certain events occurred in the market. And we looked at it, looked at the data, and decided that, well, maybe there is a point to, for the first time in Nigeria, document a series of events, the consequences of those events, and how those events are likely to shape the positioning of the market going forward. So basically, I think this was a response to readers of the earlier report.
Definitely. So that shows that just like we're seeing across the globe, the need to engage clients to provide service that suits the clients. That's what Proshare is aligning with, which is notable. And now let's look at the key highlights of this report. Very interesting highlights that we've seen. But what are they? I know there are issues around capitalization, innovations. If you could just capture the key highlights from this report for investing public to note.
Okay, well, the first thing I think is fundamental in this report is the issue of corporate governance and how the interplay of corporate governance and market development has more or less shaped our perspectives of the pricing that goes on in the stock market, as well as volumes that we are seeing in the stock market. And perhaps it gives us an idea of how technology has played over the last decade. Yeah. And let me just chip in something before you go on to your questions. For instance, in 2011, the CEO of the market came in.
Yes.
And
the current CEO.
The current CEO, yes, Mr. Oscar Yema came in, and bright-eyed boy coming in from the New York Stock Exchange with great ideas, we must say, had great ideas. And he asserted that, well, you know what? In 5 years, this market is going to go to $1 trillion. And that excited everybody. I mean,
very bold.
That was a bold statement.
Bold statement.
That was a very bold statement. In fact, what we said was that it was a big, hairy, and audacious statement.
Audacious, okay?
Yeah, it was a big, hairy, and audacious statement. And we felt that, well, that was brilliant. So now what has happened since then? And that's where we said, okay, yes, take a look at it. Today, we have a market that is about $35.12 billion, which is a long way from
$1 trillion to a $1 trillion market.
So from a $1 trillion market. So it's about, okay, so what went wrong? How come these aspirations were not met? So those for us were one of the major highlights of dissecting why the Nigerian stock market hasn't fulfilled its full potential. Because it is a great market. It does have great opportunities. But it was stunted. And there were a series of events that created that. Of course, we will quickly remember that in between 2016 and 2017, there was a global recession.
Yeah.
Okay, great. And then it was worsened this year by the fact that there was another recession. And that was caused by the coronavirus pandemic and the problem between China and Russia and Saudi Arabia and all that. So there are a lot of issues, right, that has haunted the market.
Yeah.
But another highlight of the report was that despite these challenges, there have also been some good points, right? We've seen some improvement in terms of the breadth of the market, in terms of the assets that are available for sale.
Assets,
Yes, because we broadened out the assets. We now have exchange traded funds, right? We've improved on our mutual fund market.
Yes.
So there are a lot of positives that have taken place.
Diversifying the portfolio.
Yeah, diversifying the portfolio, allowing investors a greater variety of assets to be able to invest in. Admittedly, values might seem low now.
Yeah.
But when do you really want to acquire assets? Is it when they're high or when they're low? The conventional wisdom is that you buy low and then you sell high.
Yeah.
So this perhaps is an opportunity for investors to come into the stock market, discern what looks good and what is good, right? And then buy into what is good, right? And then move gradually as a long-term player. So that's one of the things we've identified in the report.
Definitely. I mean, that $1 trillion bullish move.
That was extremely bullish.
Bullish, yeah.
That was bullish.
Well, there are some things. I mean, recently when I was looking at the Tadawul, that's the Saudi Arabian exchange, we saw that some moves made by policy, for example, unlocking the Saudi Aramco helped to push the exchange into a trillion, over $1 trillion market. Definitely, that's been part of the clamor in the Nigerian space.
We need to say something here. You know, we must admit, I mean, we've seen stocks like MTN coming recently. Yeah. We've seen stocks like Airtel Africa coming. We've seen BUA coming to the market. So we are moving in that direction. We are seeing that there is, as I said earlier, there are a widening of the breadth of assets that are available for trading on the market. But we also highlighted a slight problem here, right? Now, that slight problem is that, yes, we have the names on the market, but do we have the equities to trade? So one of the problems that you're seeing is that what analysts call free float, that is float that is not in the hands of concentrated number of people. They're very slim in the market. You take some of the cement companies, right? About over 80% of the equities are in the hands of the original owners. Okay. Telcos, similar thing, very little on the market for trade, you know, and really and truly, it's not that they violated any rule. I mean, if your equity is worth 40 billion naira and you're the premium board, I mean, it's okay. You're good to go with the little that you put into the market. However, it creates a challenge in terms of determining whether that price of that equity is fair. Right? Because if you have a monopoly of a supply of a commodity, it's not freely traded, then how do you establish the appropriate market price? And so that's one of the problems that the market faces today. There's a little free float in premium equity. I mean, if the equity is down there, right at the bottom of the rung, well, who cares? Who cares? But for premium equity, we're seeing a situation where there's very little free float. And therefore, pricing tends to be exaggerated. And if there was a lot more security in the market, then you perhaps will see much lower values for those premium stocks. Yes.
Which brings me even to the fact that you've also captured the innovations and developments. For example, the alternative securities market, SM, which tried to evolve, and now the growth board, which I know Proshare has played a key role in advocacy for the Nigeria Stock Exchange. You want to just say, because it's high growth companies also help in this regard. Discussing with other market players.
Also, you're absolutely correct, right? The SM market hasn't been too active, okay? So the exchange has decided that, you know what, let's create another level of opportunity for investors to put their money in companies that potentially will grow hopefully at a faster rate than the growth of the economy. I mean, currently the economy is at minus 6.10%. So it's contracting. So if you can have a company where you see their price moving up and their dividend yields moving up and at a pace that is faster than the pace of inflation, which is quite high now at 13.8%. So now if you can get dividend yields and capital appreciation that exceeds that, that means that you make a good real return on your investment. Okay. But even if it's not even that high, but it's significantly higher than what you would have gotten if you invested in a treasury bill, for instance, then you're good to go. So we're looking at stocks that may not have the big names, but are well managed, have great future market potential, and are such that they will guarantee for the investor sustained capital appreciation and dividend yields.
Yes, and return on investment. And you also capture, because even the tech companies can come through there, like you see in the US and others. Tech companies are really still driving the rally, and that's an opportunity.
Yeah, great. I think tech companies should come onto the market,
Definitely,
right? We need to strengthen them, because also there's the issue of corporate governance.
Yes.
And if they come into the market, there'll be greater clarity about their business model and about their cash flows, and then investors can significantly put money into those institutions, which I think is actually the future of the country, the future of the continent, technology. I
like what you said about the issue of governance, because even a billionaire like Elon Musk will have to learn lessons. Like we've seen it from SEC in the US. But let's look at a very important issue, demutualization. It has been talked about even over the decade, and finally it's taking shape in terms of ensuring that it works out in a way that creates value for market stakeholders. What we'll be saying today, because you also addressed that in the report.
Yes, the report.
And it was significant that this year, everybody was in the hall for that EGM, Extraordinary General Meeting, where the demutualization process took place, and the call of that meeting. So everything is working in tandem to achieve it. But what are the additional insights from this report on that?
The report deals with demutualization. Conceptually, it's quite brilliant. I mean, it's quite good, because what you want to see is a situation where there's a greater level of transparency in the governance of the Nigerian Stock Exchange. Okay, the opaqueness that exists while it is managed by dealers, rather than being managed by investors, will be removed. Investors are used to certain levels of detail in the management of companies. So what we're going to see is that rather than the stock exchange being managed by guarantee, it's a limited liability company. So it's as a limited liability company that is also quoted on its own floor. It will also be quoted on its own floor.
Highest level of
there will be the highest level of corporate governance required. I mean, you can't be my regulator and you're doing anything short of what you expect me to do as an operator in the market, right? So we expect to see that. However, there are concerns. I mean, supposing I'm a large company listed on the premium board, I have a lot of money, and I decide to invest heavily in the stock exchange on which I'm trading. Is there a conflict of interest?
That's where the Securities Exchange Commission, I know the previous acting Director General said, that's an area that has to be really looked at. The conflict of interest you've just raised, the conflict of interest is very, very important.
And quite honestly, the report talks about a lot of drama that occurred in causing a delay in the demutualization, because those were serious concerns. While the investors were very keen on a fast-tracked movement towards demutualization, the authorities at the time, and that was prior to 2011, they felt that there is need for a little bit of caution, which I think SEC took up also at that period of time, that we need to resolve those issues of conflicts. And that is very, very important, because you can't have a few men and women with means controlling an exchange on which they are listed. Okay, there's obvious conflict of interest there. So we need to ensure that we have the optimum level of corporate governance there. But in any case, it is not new. I mean, demutualization started in Stockholm, Sweden in 1997.
We've seen how it has evolved in
even
in Africa.
In Africa. Johannesburg Stock Exchange is demutualized. So we can pick up a lesson from others. And like one person rightly pointed out, look, the truth of the matter is that it's always good to use other people's experiences. Why? It's cheaper. So we learn from errors they made and we avoid them. And we learn from the quick wins they were able to deliver, and we take advantage of that. So I think that's where we are.
Definitely. And we would be monitoring to see how that whole process
Proshare will definitely be
monitored. The issue of corporate governance is one area Proshare has always leveraged on. And you want to say one or two things additionally on corporate governance over the decade, because that's very key. Remember, the retail investors still lack that confidence. We want to bring them back, but corporate governance is very important.
I think corporate governance is important in every aspect of life, even in your own personal life.
Definitely.
You should govern yourself properly.
Definitely.
So corporate governance
that's 2008, 2009 whole crisis and issues like that. It really
we went deep into the report on the crisis that occurred in 2008, 2009. The report tried to explain the circumstances of the time, and we did not apportion blame.
Yeah.
We only stated what the issues were.
Yeah.
And so the readers can go ahead and read it and see what those are. And they can choose to apportion blame if they like. But we didn't apportion blame. We just stated that, look, this is what happened, right? There were governance issues. But then again, we need to understand that this was happening at a time where there was a global economic recession.
Definitely.
Right. So in that period of time, there was a lot of uncertainty, a lot of ambiguity, right? Volatility.
Clouding the market,
and the market, yes, the market was in a flux.
Activity,
So at that period of time, there might have been some things that had been unconventional. But we're seeing a certain elevation of the unconventional, the unorthodox, even in our current market. And I'm not talking about the stock market alone. Even in when you go into the wider economy, we've seen the CBN adopt what is called a heterodox monetary policy. Sometimes in challenging situations, you do the unconventional. That's it. And we're seeing globally. We're seeing
central banks, Federal Reserve, Bank of England, European Central Bank, all taking unorthodox positions. So that's what we saw then. It was quite a nifty period of emotions, egos, and brickbats. It was quite a difficult situation for the market. But like Nigeria has shown repeatedly, we have resiliently overcome that era. Okay, we've gone past that era. So with the new man coming in 2011, there's been a fairly certain amount of peace. Okay, the market has gone out of the emotional modes of personalities to that of market growth. Okay, even though we haven't grown at a pace we would have desired, but we have seen stability in governance at the exchange, and we have seen the possibilities that could occur if we allow peace to reign and we stay focused on the mission. And I like the fact that you took some historical perspective. You know, Nigeria is going to clock 62 very soon, and Nigeria Stock Exchange was around 1964, so people can get a history of all those past leaders, activities, and all that. I mean, that's a very nice one. But you also took a futuristic approach because it's also about the future of the markets. And you now looked at artificial intelligence. I mean, that's one issue that has been on discussion. And recently, the Securities and Exchange Commission have been issuing out statements and rules around technology, looking at how important it will be. So for you, I mean, how would the AI play a critical role in market developments? And particularly, you also been talking about the millennials, because we can't avoid them in this time. They have to also be involved. They drive the whole thing. If you look at what is happening even in this program, the Big Brother, the future of the market, we need to catch them at this point.
Otto, I think you've raised one of the most significant issues of our time. The issue of millennials and the issue of technology perhaps are Siamese twins linked together at the navel. And the reason why, basically, because the new generation of Nigerians that we're seeing, that we call Generation Z, the new generation of Nigerians we are seeing are tech savvy, right? They expect things quickly. They expect validation of service quality instantly. And they have very little patience. If you simply don't get it right first time, all the time, you're done for. Because they believe that before you market a product or market a service, you have done all your tests and you have taken them into consideration. In other words, the Generation Z's journey experience is a lot different from the millennials, because there's times that we try to confuse, or
so the Gen Zs are really the
Gen Zs are the things. Their generation is a lot different from the millennials. The millennials actually have some element of baby boomers. There's a certain amount of conservatism, and the new chaps don't have that patience for conservatism. They want now. They want it now. And for them to get it now, they expect that you feed into that journey. And that's why you see that a lot of Gen Zers are not actually on the equities market. They're not doing equities business. They're doing technology business. Right?
Which is why even SEC has brought out that.
That's
cryptos, blockchain, all those things.
God bless you. So you're seeing Ethereum, you're seeing all the other cryptocurrencies, taking the fall. And if they're not into cryptos, they're into FX trading. Okay? So what it means is that they're expecting gratification early. Deferred gratification doesn't occur in their dictionary, right? So they're expecting early gratification. Unfortunately, the nature of the stock market as an investment platform does not allow for quick. you have to take time, right? You have to
Long-term,
mature, you have to
yeah.
take time and do the analysis, make sure that the companies are sound, solid, and then you can go in, right? But does that mean the Gen Zers don't have a space in that market? No, it doesn't.
Yeah.
Actually, they have a better reason to come into the market because they're very young, right?
Young.
They're in their teens, their late teens and early 20s. So they've got more years to stay with their company. So the report says, look, you've got to take, the market needs to be designed in such a way where communication with that generation is a lot more robust.
Leveraging the digital platform,
leveraging digital platform or social media and all that. Make, pardon the word, pardon my French, make equity sexy. Right, yeah, so you make it good. You make it interesting, right? Even if you did a couple of games, online games, you know, equity games, and allow these people to trade in quasi money, or if you like, make it monopoly money. And they trade, and they start trading, and they see that, look, within a period of time, they're actually billionaires. They're multimillionaires within a period of time because they did the right investments today. So if there were those kind of things online, and we saw these people trading, you know, virtually and seeing improvements, give them dummy companies that they can invest in with certain characteristics. They get to learn. It's a touch and feel thing. They get to learn how to invest, what to look out for in a company. And then before you know it, they migrate to the real market.
Right? So that dummy, that whole experience,
prepares their minds for trading actively in the market. I mean, I'll give an instance, Warren Buffett. At the age of 13, Warren Buffett already had investments in agriculture.
And he had been learning.
And he had been learning, made his mistakes, invested in wrong things. He has done all kinds of investment as a teenager. Nigerians need to educate teenagers about how they can commit to future streams of cash flow by investing in certain strategic areas.
Making the right decisions.
By reaching the right decisions.
Product orientation.
So there's a lot that needs to be done. There's a lot that needs to be done in terms of education by SEC, by the NSE itself, by the FMDQ. And I think FMDQ is doing quite a great job anyway.
Yes,
I'm not trying to market them, but they are doing quite a great job. But we need to see more of that.
Yes, Ex-Academy.
Ex-Academy, exactly. So the exchange itself with this Ex-Academy. But then again, we have to go to the streets.
Definitely.
We have
to shows and
you have to democratize equity.
Yeah.
So you're going to the streets and letting now the streets understand what they can gain.
So we must leverage technology to democratize equity.
We must engage technology because the truth of the matter is that the investor of the future is going to be a very, very tech-savvy person. So he's holding his phone and he wants to be able to see equities scrolling down. He wants to know how the market has trended, and it's on his phone.
I'm looking at that. I'm looking at what you just said because, you know, recently we checked one side and sports bet is the biggest site utilized by these millennials and even the Gen Z young guys. So you can imagine making the market like you're looking at it and trading it.
Trading
like
it
you're
live
looking at bets
on your phone, on your mobile device.
So looking at Dangote or something.
Yes,
like
you
that.
see where it is. And then, as a matter of fact, even investor reports are there online on your phone. Their projections are online, and then you can. And it's good for the punters because if I take a decision based on a particular analyst and I lose money, I flip to another analyst quickly. I don't waste my time. Like, don't forget I'm Gen Z.
Definitely, that's how it should be. And I'm aware of some of the developments in Nigerian Stock Exchange and some of the CMOs, capital market operators like Meristem and Nigerian Stock Exchange. They did a X-Carton last year where they give prizes to top 3 who could develop those kind of scenarios to improve millennial participation in the market and Gen Z. So hopefully this year they should have an edition and they should leverage on that from what you're saying, improve the scenarios for millennials and Gen Zs to participate. But let's look at the pathway for the market going forward. This has been a challenging year, Mr. Teslim, and from the COVID-19 pandemic, we've seen the learning points, technology, helping markets operate amidst the pandemic, which we will commend all the operators for. But going forward, what are the 2-3 things you see that will really shape the NSE going ahead in this period, beyond the demoturalization too?
Okay, right. First thing I think will shape the NSE is its own vision. How bold is it? I mean, Oscar Yema came in and said, look, you know what? In 5 years, we're going to do a $1 trillion market.
Well, we're way too long to the $1 trillion.
So we're way far from that. Yeah. However, it doesn't vitiate the dream.
Okay.
We could say that, okay, you know what, maybe that was a bit over the top. But you know what, we are going to do $500 million.
Okay.
And in 5 years, we're going to do it. And then this is how we are going to do it. And so you have a plan in place. You've got to rethink the market. You've got to re-strategize the market. Okay? And for me also, you've just got to be bold, audacious, and courageous. That is the quality of the new investor. He's going to take a stake on Nigeria as a country because it's a bet on Nigeria. It's not just a bet on, because look, if Nigeria doesn't do well, for goodness sake, no other company that is on there is likely to do well, right? Because I'm going to look at it as
the market reflects the economy.
It reflects the economy. So I'm taking a stake on Nigeria. So it comes from the fact that those who run Nigeria have to be bold, audacious, and more importantly, they must be such that they include everybody. There's a lack of inclusiveness. And the market also has to do that. That's why I was talking about the market going down to the market. And the market is the retail market. You go down to the retail market, get these Gen Zers in, get the millennials in, the baby boomers already there, so you don't need to worry. They've invested a long time ago, made some money, lost some money. Right? But they're still there. And that's the first thing that I think. But then again, another key point that we've got to do is one of the things we just discussed, which is technology. We can't afford to lag. We can't be laggers in the technology space, right? It's not just about the market as it is today.
Even the regulations should.
The regulations. So that's the third leg I was going to say. Now, we've got to look at the market tomorrow. Because the market today is a product of what happened yesterday. Yesterday is gone. So today, you have to build the foundations of tomorrow. So the technology of tomorrow should be here today. Sandboxes, like you pointed out, should be created that enables us to bring out some products that will service that interest, where I can go on the road and I start scrolling and say, oh, no, I'm not, that stock is doing rubbish. I say, move my money, sell this, and I do it on my phone. Right? So we've got to get to that point. That's very crucial. Now, the other leg, which I will say is the final leg of what I'm interested in, basically, is the issue of regulation. Because what we've seen historically is that regulation always lags the market. And that is dangerous. In a fast-paced, fast-moving market, so regulation cannot lag the market. It must lead the market. So you're already thinking, I commend SEC for looking at the questions of cryptocurrency. But that is digital assets and digital assets. But hey, that's about a decade later. I don't know, but these things need to be. You've got to think forward. You've got to think forward. Your research department has to look at where the potentials are,
and there has to be that cooperation. You know, you have the IOSCO, the international organization, so you can also discuss with them and say, what are the trends?
What are the trends exactly? So you key into the trends and say, okay, fine. Based on these trends, if this lands, it hasn't landed yet, but if it does land, then we're prepared with this regulation. So yes, you can bring in this kind of asset for trading. However, this is like crowdfunding. Right. So yes, you can do crowdfunding, but there are these limitations on crowdfunding. And because we've already seen some very interesting yields on so-called crowdfunding instruments in the agricultural sector that are likely to go bust, because I don't see how you can hit those rates within a narrow market like ours. But we need to have the laws in place, okay, so that people don't get scammed. Ponzi schemes don't thrive. Right, so that's
we don't get scammed by another MMM.
Yes, exactly.
I was reminded because of the billions of naira
that went
lost, down, which was not really good. Thank you very much, Mr.
It's been a pleasure being on your program.
Very nice, refreshing insight into NSE 10 years after I take over, the good, the bad, and undecided. Thank you once again.
Thank you very much.
I'm looking forward to future incisive reports.
Oh yes, you can trust.
Commendation to the research team. Nice one.
Thank you very much. Thank you also.
Yeah, that was the discussion around the NSE 10 years, Nigeria Stock Exchange decade after I take over, the good, the bad, and undecided reports, which the managing editor of Proshare has given us insight into. A very wonderful report published by the research team, the analyst team in Proshare. So if you want to get more of this report, log on to www.proshareengineering.com, and on the search bar, click on the reports and get on to this very incisive report where you read and learn more about the evolution of the markets in a decade, the developments, innovations, and critical issues, and the way forward through technology, and how we can build a viable stock exchange. That'll be all for this edition of the Market Review, where we look at the financial and capital market as relates to the economy. It's a Friday. Definitely you're raring to wrap up work today and go on for an interesting weekend. But don't forget, ProShare site is there for you to learn through the weekend to get understanding of the market and activities. You can also send your comments on this report to research@proshareng.com, and also news@proshareng.com. We'll look at it and respond appropriately. Till we come your way again, thank you for watching. Have a nice day. Stay safe and have a great week ahead.